case of a lotto winnings, for the federal, for IRS, it's always taxable.
Oh,
For the
okay.
state of California, as a benefit, because you put your dollar down and you won, it's not taxable.
Oh, okay, so that's an important distinction.
That's
Okay,
correct.
okay.
When preparing your return, you have to claim it on the federal, but you also have to take it out for the state. It won't automatically happen. If you use this internet software, you have to know what to do. If you go to a preparer, they should know what to do. But that's one of the differences.
Okay.
Another, the home buyer credit. It was great. It helped I guess, realtors, and a lot of people bought homes, but unfortunately there's a lot of fraud in there. And over 250,000 tax returns have been pulled to look closer at this home buyer credit. There's a lot of room for fraud in there, because you say, I bought a house. So what they ask for, or if what you want to do, again, in case you get that correspondence audit, that's the first one. Or if you have a field, or not a field, but an office audit, you bring a copy of your settlement papers. It shows that this was when you bought it, how much you paid for it, and when it closed. Those are the important things they want to see, and that will help you on that. Now, another one, which we all run across, charitable deductions. We all like to give to charity, makes us feel warm and fuzzy. Unfortunately, some people claim more than they actually give. There was a survey done by IRS a few years ago, and the charitable organization said they received one number, but adding up all the charitable deductions on the tax return, it was a totally different number, a lot higher number. So they're constantly looking at this. This will generate not only an office audit, but again, an audit, correspondence audit. But more likely, it's going to generate an office audit. The reason being is you need to bring in those checks and the letter from whatever organization you have. Home office deduction. If you have a business at home, you can take that, but you must have a separate place for that business. It can't be the living room where you watch TV at night. You have to have a separate room, and it has to be set aside for business. No one, it's not it can be a habitable room, but it's not a living space room. So if you take that spare bedroom, you have to take the bed out, got to take the TV out, put the desk in. It has to be purely an office.
Okay.
Business meals and entertainment, that's always one they look at, particularly on Schedule C or sole proprietor, because sole proprietor tax returns always, well, not always, but usually over-report their expenses and under-report their income. We have some strategies for small business people who use Schedule C, and that'd be on another episode of what to do for tax strategies. But this is something IRS always looks at, because you need to document that. You need to have documentation for that entertainment, who you entertained, where you entertained, and how much. If you're claiming a business use of your vehicle, try not to claim 100%, because always on question, either in an office audit, usually they're going to ask you, did you ever go to the store? Unless you have 2 or more vehicles, you cannot use that vehicle 100% of the time for business. Now, what I've seen and a lot of is hobby loss. A lot of times people have a business, or they get into business, particularly internet businesses, they will take a loss. You know, you're just getting started. Let's say you're making plastic cups. So you have to do your marketing. You have to do all that to get it out there. That's understandable. First year you may only make a few hundred or a few $1,000s, but spend 4 times that much. So you may be able to take that loss. It's the second or third year. If you're still in that loss situation, they will challenge that. They will say, hey, this is a hobby. There are certain industries that tend to go that way. If you have horses, and not many people I know of raise or race horses, but I do see it a lot with people who have these internet type businesses. So that's something to be well aware of. Now, cash business. This is a big one that both IRS, Franchise Tax Board, EDD, and the Board of Equalization are out looking at in force. If you have a barber shop, a hair salon, a restaurant, anything that does cash business, most of the time, they are high on the list because just for that very reason, cash tends to be underreported, and therefore they are coming out in force. They have special programs, they look for those, and they're gearing up. Takes IRS and EDD about a year to get their programs up and running. That year was last year. This year, a lot of more audits are going to come out.
Wow.
Now, something that's really been in the news lately, failure to report a foreign bank account. Well, you know, I don't have any foreign bank accounts.
Either.
But there are a lot of people who do.
Yeah.
And what they are doing is they're trying to make sure they're reporting all that income, the interest income or whatever income they get from these foreign bank accounts. So they give what they call these periods where if you report your income, there's no penalty. And you need to take advantage of that because they're constantly out going to those safe haven countries, Switzerland, the Cayman Islands, the Bahamas, and getting tax agreements to get lists of all the people who have these foreign bank accounts. Then what you will get is a notice that says, we know you owe, and there's no wiggle room in that one. So that's a word to the wise.
Yes, it is.
Another is engaging in currency transactions. This has a couple implications. If you have a cash business, that's one way that they can find you. But also it is for organized crime.
Oh, okay.
Because people depositing more than $10,000, or if it's less than $10,000 on a regular basis, then the banks turn this over to IRS, to drug enforcement, to a host of others, including Homeland Security.
Wow.
Now, one that should be near and dear to your heart, math errors. And that one is which...
She's outing me.
Oh, I'm sorry. I told you you would be able to spot it, and I blew that one. So, if 1 and 1 equals 3, they're going to let you know.
Yeah.
And that a lot of times comes on handwritten returns, but also surprisingly on computer returns. You can do that. I have seen that. And so that will generate first a letter telling you that this was wrong, we made a change, this is what you should get back, and if not, if you agree with it, okay. If you don't agree with it, then, you know, that's okay too. They'll send it back.
And just so you know, Anthony has told me in uncertain terms that I am not to do any more handwritten things, which is what I was doing. That is so archaic, that is not even funny.
That's correct. Yeah. And the last one is taking above average deductions. Now, IRS keeps a score, obviously, because they have all these returns. Over 260 million returns are filed. Now, in terms of individual returns, it's about 100 million or so. And you have an average of how much in taxes for how much income, wage income, business income, and so on. So if your deduction, let's say for charity, is above that average, it may get looked at. So you need to have those, that substantiation. If you have, in California is definitely one of those states where everything is higher, so your mortgage interest is going to be higher. Now the good news is IRS gets a copy of that, so they're not going to question that too much, but they don't get a copy of your real estate property tax bill. So it may be high to them based on your income. However, it may be because you're in California. So if you get that, just be prepared to show that. Now, if you have business deductions, let's say